Hey guys, welcome back to my channel on all things math, Excel, and business tutorials. In my last financial management video, I covered two of the three major financial statements, being the balance sheet and the income statement. Today, we're going to talk about the third one, cash flows. We're going to cover cash flows from assets, cash flow to stockholders, and cash flow to creditors. Now, for cash flow from assets, we need to know three things: operating cash flow, capital spending, and net working capital. So we're going to start with those. If you remember in our previous example, we were given the data that's on the left, the sales, cost of goods sold, depreciation, interest, etc. When we're talking about operating cash flows, we're going to be doing the same thing as an income statement, revenues minus cost, except we're not going to include depreciation or interest. The reason is depreciation is not an outflow of cash, and interest we're going to count as a financing expense. We will, however, include taxes because taxes are paid in cash, unfortunately. So the formula is EBIT, earnings before interest and taxes, which is in our case 922. If you don't know how to calculate that, we calculated that in our income statement. So if you go back to that video, you can see how this was done. We add the depreciation, which was in the given, which was 952, and we subtract our taxes, which we also calculated in the income statement of 152, and we have an operating cash flow of 1,722. Then we need to do capital spending. The formula for capital spending is end net fixed assets minus beginning net fixed assets plus depreciation, and then we get net capital spending. So where do we find this information? The end net fixed assets. So we have 2017 and 2018 data. If we go into our table of which was given, we see that at the end of 2018, the net fixed assets was 7,650. That's our end net fixed assets. The beginning net fixed assets would be the year before, which would be 2017, which we see to be 7,344. And the depreciation, which is written in 2018, was 952. So we take the end, we subtract the beginning, we add the depreciation, and we get 1,250. So end minus beginning plus depreciation. That's our capital spending. Now we're going to do net working capital. The formula for net working capital is the end net working capital minus the beginning net working capital. Simple. And that calculates the change in net working capital. Pretty straightforward. How do we find the end net working capital? So we have to go to our most recent year, which is 2018, and we take our current assets. So in 2018, current assets was 2,429, and you subtract current liabilities, which was 1,255, and we get 1,174. That's our end net working capital. To calculate beginning net working capital, we're going to do the same thing, but for 2017. So in 2017, we have current assets of 2,205 minus current liabilities of 1,003, and we get 1,202. So to calculate the change in net working capital, it's your end net working capital minus your beginning, and in this case, it's negative 28. Cash flow from assets. So remember, we needed three things to do cash flow from assets: operating cash flow, capital spending, and net working capital. We calculated all those three. We found our cash flow, operating cash flow, to be 1,722. So then we're going to subtract our net capital spending, which we calculated to be 1,258. And then we're going to subtract our change in net working capital. But remember, our net working capital difference was negative. So when we subtract a negative, we're adding it, because to subtract the negative, that's a positive, and you add it. So that gets us cash flow from assets being 492. Now, cash flow to creditors. In order to calculate cash flow to creditors, you need two things: interest paid and net new borrowing. In our table, we see that 2018, the interest was $196. To calculate net new borrowing, you have to compare the debt. How much more did we borrow, or how much less than we borrow? That's the difference. So if we look at our table, in 2018, we have a $2,085 long-term debt, as opposed to 2017, which was $3,106. So we take the 2018 debt, subtract the 2017 debt, and we get negative 1,021, which means our debt from 2018 was $1,021 less than 2017. We subtract that from interest paid, and we get our cash flow to creditors. To calculate cash flow to stockholders, instead of looking at the interest, we're going to look at the dividends, and we're also going to be looking at net new equity raised. So again, the dividends of $352 is in our table, 2018, dividends, $352. And how do we calculate net new equity raised? Now, in order to know the new equity raised, you need to know the equity for the current year, 2018, and the equity for the previous year, 2017. That's not in our table. But we did calculate these equities in the income statement. So if you go back to the video, you can see the calculation for equities, But remember, assets is liabilities plus stockholders' equities. So you could just simply take your assets, subtract your liabilities, and you'll get that equity. So in our case, 2018 equity was 6,739, and the equity for 2017 was 5,440, not 2019, sorry. And when we subtract those two, we get 1,299. Now, another thing to remember is that in our income statement, we calculated in addition to retained earnings. So out of that 1,299, we also have to take away that 222 addition to retained earnings we calculated in order to figure out net new equity raised. And that, subtracting that, gives us 1,077. So we take our dividends, we subtract net new equity raised, and we get our cash flow to stockholders. That's cash flows for you guys. I hope this example helped clarify a few things. If you need touching up on income statements or balance sheets, you could refer to my previous video. I hope this video helped. If you guys have any problems, questions, please leave them in the comments. If you like the video, like, comment, subscribe, share it with a friend, and let's help as many people as we can.